Traders at Access Bank say that they expect the risk-on sentiment in the Treasury Bills market to prevail in the near term as the market continues to witness buying sentiment on OMO bills. Anthony Aigbokhan, a Treasury Team member at Access Bank, joins me now for a market update. Thank you so much for your time today, Anthony, and I'd like you to bring us up to speed, especially what we're seeing with the risk-on sentiments there in the market.
Thank you very much for having me. Good afternoon once again. So I would start with the market liquidity, system liquidity. We've seen it decline, currently at 100 billion level. This would be largely driven by the cash reserve ratio debit that the central bank passed to different banks. Constantly, we've seen the OPR and overnight rates each higher, currently at 27.5% and 28.5% respectively. We still expect these rates to still go slightly higher, barring any significant funding activity. In the Nigerian Treasury bill space, we've seen, just as you said, a bit of risk-on sentiment. A lot of bullish activity has been going on the Nigerian Treasury bill space. We've seen buying, particularly on the long-dated OMO bills, where we've seen the yields at currently at 28% yields and 22% discount. We still expect this buying sentiment to persist as market players are anticipating and working towards the NTB auction that is scheduled to hold next week.
All right, but for the T-bills, though, how sustainable would you say this optimism is, considering the inflationary pressures we're seeing and also the exchange rate uncertainty?
Yeah, we still feel the positive sentiments will persist. Largely, we've seen the trade war, the impact of the discussion between the US and China bring a lot of positive sentiments to the market. So we've seen a lot of participation also on the OMO bill side and on the NTB side. We saw the central bank do a lot of, like, 3 different auctions in the last 2 to 3 weeks on the OMO bill side. So that has shown a lot of participation, a lot of activity has been going on. The yields there are also very attractive. We've seen discount rates at 22.6% levels, which is a yield of almost 28%, which is higher than what the inflation is currently giving you a positive carry. So we still expect this bullish sentiment and these activities to persist in the NTB, particularly on the OMO bill space.
Yeah, still speaking on the OMO bills there, with that demand we're seeing, especially from the banks and the foreign investors there, would you say it's a bet on yield stability on one hand, or is it a hedge against the macro volatility in the medium term?
I think it's a bit of both, really. If you really look at how they have been participating in the market, especially if you look at the foreign exchange side, where we've seen the Naira strengthen this week. It's also worthy to note that we haven't seen the central bank coming in to intervene. So it seems that we've seen supply coming from different other participants, notably the foreign portfolio investors and also banks, interbank coming into the market. So I think that stability, that strength that we've seen on the Naira has also driven a lot of sentiment, a lot of positive sentiments on the OMO bill side. We also have almost up to 2 trillion of OMO bills maturing this month, so we also still expect the central bank to float more OMO auctions, and this should also drive more activity, more participation in the OMO bill space. Also, again, the rates very, very attractive at 22.6% levels. These are very, very attractive discount rates. So we still expect to see that participation continue in the OMO bill side.
All right, but finally, as we get to wrap up, I just want to speak about the bond space. And for you, what would you say are some of the key catalysts that are missing to revive the broader participation, especially in the long end of the curve?
Yes, so we've seen the bond market a bit quiet, not unlike the Treasury bill side, particularly as market players are watching to see the dynamics of the market. There was a DMO Sukuk auction that's currently ongoing, where over 300 billion is on offer. We expect to see this auction to be oversubscribed. This is also having to drive a lot of activity, trying to spur activity in the bond space. There's also going to be a bond auction coming up next week. We also still expect market participants to be active at the auction. We expect rates to still remain at the levels where the last auction closed at 19.9% on the medium, on the belly of the curve. So although the market is a bit quiet, but we still expect to see a bit of interest. A bit, not as much as we'll see on the shorter end of the curve, but we still expect to see this interest on the bond side of the curve.
All right, there are interesting times ahead for the market, but thank you so much for your time today. Anthony Aigbokhan, a Treasury Team member at Access Banks, giving us a run-through of a midweek analysis of the Nigerian fixed income and FX markets here.